Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we are joined by Tim Picciott of the Liberty Advisor, and we are going to get into some news out of Manhattan, which honestly I think it kind of reflects the entire country, but it's interesting news nonetheless. Coming out of Zero Hedge, which this article says Manhattan's retail industry is imploding before the holiday season. And as the article goes into, retail rents in Manhattan have fallen again, this time before the holiday season, an ominous sign that consumer health is deteriorating. Maybe retail spending this holiday season will be somewhat disappointing. After all, President Trump was seen on Twitter on Monday asking his 66.5 million followers to spend more of their money as the stock market rose to new highs. Anytime the government asks its citizens to spend money, it usually means trouble ahead. And breaking away for a second, I just can't help but think of, Jeb Bush saying, "Please clap" to the audience. I don't know. It kind of, it's reminiscent. Anyway, getting back to the article, it says, the average asking rents across Upper Fifth Avenue, especially between 42nd and 49th Streets, saw one of the steepest drops in retail rents in Q3, falling 25% year over year, reported Bloomberg, citing a new report from Jones Lang LaSalle Inc. As shown below, Lower Fifth, Broadway, Madison Avenue, Soho, and Herald Square retail rents over the same period were in free fall. This is a reflection of the weakening consumer base ahead of the holiday season. There were several outliers. Upper Fifth and Times Square retail rents over the same period marginally declined. Meanwhile, the Meatpacking District saw rents jump 7.3% in Q3 year over year, and you can see the chart there. Moving on, it says, across Manhattan's retail industry, average rents plunged on average 8% in Q3 year over year. Patrick Smith, vice chairman at JLL's retail brokerage, said declining rents in some of NYC's most popular shopping districts indicate declining consumer traffic. A random walk down Manhattan and you'll find nowadays streets overwhelmed with vacant retail shops as landlords begging for tenants slam rents lower. The Real Deal has said Manhattan's Upper East Side is facing a retail vacancy epidemic. Manhattan Borough President Gail Brewer has said more than 188 vacant shops can be found along Broadway. Douglas Elliman, real estate brokerage, has said 20% of Manhattan retail is likely vacant, up 7% since 2016. Manhattan's retail rents and retail vacancies problems could be a sign that the broader economy is faltering. If so, this would be terrible news for the consumer, which powers 70% of GDP. This could all mean a recession ahead, and it's interesting to see them say, well, it could mean that the economy is faltering. Well, I think it goes without saying at this point. Again, you have the president saying that you should buy more. And that, first of all, I don't want to blame this on the president. This is a far greater epidemic that is much deeper than this. But of course, we've seen the end of businesses like Macy's and Sears greatly over the last several years. Yeah, they're still standing, but by a thread. I mean, look at General Electric, for example. They got into financialization, and they haven't been doing so well either. They've been in a tailspin for years and years. The recession never ended. It was just papered over with vast amounts of printed currency. And I think this is just another example of that, all while, we see rents. I mean, New York rents in general are absurd. One of the most absurd things I've ever seen is just how people could live in rat-infested bachelor apartments and spend thousands and thousands a month to live there. It says a lot about what's happening in the economy. Tim, what do you think about this news out of Manhattan and the broader issue that spreads countrywide, nationwide, even worldwide?
Well, thanks, Josh. Well, the first thing that kind of strikes me as I'm taking, just sort of eyeballing these numbers over here is you take a look at Lower Fifth Ave, looks like it's down, again, eyeballing this, about 25% in rents. Broadway looks like it's down a little over 20. Madison Avenue looks like it's down about 15%. Soho looks like it's down probably close to 15% as well, and it just goes on and on from there. So, and you pointed out, this is not something that is Trump's fault. The very first podcast I ever shot was actually the week after the election, and I said, listen, I don't care if Jesus was elected. There's no way that you can basically stop the train that's coming, and I think Trump did a good job of delaying what was coming. ultimately making it worse. And unfortunately, getting a lot of the so-called Tea Party people, a lot of the conservatives out there who now have kind of moved away from what the real issue was, which we thought, I mean, and you and I and John and everyone, that's probably watching this know that the real issue has to do with Federal Reserve and central banking, and the fact that the first dollar that was ever created is impossible to pay back anyway. So the whole system is really such a sham. But what really strikes me is when you have, especially when you had George W. Bush. It's hard to get all these crime family members straight over here. But when you've got George W. Bush saying that the best thing Americans can do is go out and spend, that is what's good for the economy. That's what's good for boosting GDP. But what's funny about that is that in order for people to spend money, it means they're not saving money. And they've absolutely destroyed the ability of Americans and actually people worldwide to save money and get any interest off of that. And if you take a look at certain numbers, and I think one of the very first solo episodes I ever did was actually a talk that I did at Arizona, and I was going over all the different demographic issues and all the issues in terms of how much baby boomers have saved. And I can't remember the exact number off my head, but I mean, I want to say it was like over half of baby boomers had less than $250,000, which means, okay, great, you get $4,000 a year to live off of in retirement, plus Social Security, which that Social Security is just nothing but a file cabinet in West Virginia in the Office of the Debt that just has a bunch of IOUs in it. I mean, that is what the Social Security Trust Fund is. It's just a filing cabinet with a lock on it, and it's not even big. I mean, actually, I'd say the desk I have behind me is probably even bigger than the one that they have. It's actually quite embarrassing if you take a look at it. But yeah, when we're taking a look at these rents going down, I mean, obviously, Manhattan is supposed to be one of the biggest booming epicenters of America and what's going on, and the fact that if you can make it in Manhattan, you can make it anywhere. But so maybe right now, if you can't make it there, maybe what are you gonna do? You make it online. I mean, we saw even lots of online places are going out of business as well, and the consumer is strapped. Certainly, there's certain places that are doing well, but this is off the backs of right now where we are at all-time stock market high or darn near close to there, depending on when this video comes out, territory right now, which means people should be feeling the most enthusiastic. People should be feeling the most from what's called the wealth effect. The wealth effect is you've got paper assets, and so let's say Bitcoin's at, hypothetically, let's say it's at $20,000 again. Now all of a sudden a lot of people that we know will maybe start spending a little more freely because the prices at their wealth effect is perceivably higher. And so when I take a look at this, I guess it's not really too, I guess the only thing that is surprising is how far these rates have come down so quickly. I mean, when you're talking lower Fifth Ave down 25%, Broadway down close to 20%. I mean, New York City is not really my scene. I'm originally from New York, upstate New York. So I feel like I do have some ability to be able to talk crap about New York because I am, I lived there for most of my life, one way, shape or another. But even I had to get out of there. I mean, I went to a liberal arts school, so I know all the propaganda that's involved. And when you've got, the government over there constantly, I mean, I work in the financial services industry. And so when we had to do certain products that were relating to insurance or even products relating to just about anything, what people don't know is that most of the time what happened is the other 49 states had one company, and then companies would then have subsidiary companies that was just for New York. And to do things in New York, it took way longer. You got paid less, way more, hoops you had to jump through. And just as a business owner myself, it was just, I mean, this was like, from 22 to probably 25 years old, I was living there. But I still have clients in New York. And when we do things, a lot of times there's products that are offered in 49 states and not offered in New York. And usually the one that's offered in New York, not usually, 100% of the time, it's much, much worse. It costs more. And it's all in the name of, quote unquote, protecting the consumer.
It's interesting to point out, and I've been reporting on it for a couple of years. There has been a mass exodus from New York City, from New Jersey, from California to places like Florida, to places like Texas, to places like Nevada. I think scouting out state taxes and stuff like that. I've noticed it's been quite a prevalent issue. But talking about 188 vacancies on like shopfront vacancies on Broadway alone. It's almost like we're looking at the beginning of like the ghost cities that we saw in China, because there's so many empty buildings popping up all over New York, and it goes without saying that we have seen a huge downturn with businesses like Macy's, with businesses like Sears, Woolworths, all that kind of stuff. The old guard, but at the same time, we're seeing kind
Jeffrey
of a
Jeffrey
epstein
Epstein and Co. is also out of business now.
yeah, and Epstein didn't
I
kill
mean, he had
himself.
the
But
largest. Yeah, he had the largest building in Manhattan.
yeah,
For
right,
so
right,
many
right. But also we're seeing the fall of these businesses, but we are seeing the rise of other businesses. Like we're seeing the rise of dollar stores. We're seeing the rise of these really cheap places where people can buy rip-off brands for real cheap compared to the usual. I'm seeing a lot of these getting built all over the country wherever I go, which seems to tell me something. Something really big is happening. And with Singles Day recently, we've seen Alibaba get, I think they made $38 billion. I mean, it's just crazy. So online retailers are doing a bit better, though the curse of the online retailer is that they constantly have to get better and bigger and better and bigger, or else they collapse because they have built themselves up so extremely high that they're forced to constantly come out with new great ideas, or else they go under. But one thing is for sure, convenience is on one factor, and the other factor is cheaper things that people can buy rip-off brands at better rates at places like the Dollar General and stuff like that you see all over the country. What do you think that says when we're seeing like these really nice old businesses that people loved for so long all going under while people flood to these cheaper entities?
Well, I think it means that the consumer is strapped, and as the consumer is strapped, they're going to want to go to places they can afford. And right now, they can afford the dollar store, and maybe because of inflation, they'll be the $2 store pretty soon. I haven't been there in a
Yeah.
while.
Seriously,
And
there's almost nothing at the dollar store that's under $1. It's ridiculous.
I know, of course, we are. I'm also reporting from Arizona, and I left the door open, so I've got like one fly in here. So I know someone's going to mention it in the comments. But maybe it's Jeffrey Epstein flying around me for reporting on him. But another thing I do want to point out, because I know this is also probably going to be mentioned, is people can say, "Oh, well, stock market's all-time highs, and you guys are reporting this doom and gloom nonstop." And meanwhile, I'm looking at an article right now from Zero Hedge about market soars corporate profit slump, and what it talks about is companies with more than 50% of sales in international markets, these are S&P 500 companies, reported a 9.1% decline in profits and a 2% decline in revenue. All S&P companies report a 3.7 slip in earnings thus far for the third quarter of 2019. And this is a trend that's gone on pretty much since the plunge protection team and everyone and all the cavalry came at the end of December of last year to save the stock market. But so you're figuring what should be the biggest driver of the stock market? It should be corporate earnings. Well, corporate earnings are going down. Corporate earnings going down means now that there's no way in hell that the Federal Reserve is raising rates, which is something we were talking about last year at this time. But now everyone pretty much knows that, and because the bad news means that now that which is declining corporate profits, now means that there's quote unquote good news, because now there's not going to be any perceived rate hikes, and maybe it means that there's even going to be more. When I say maybe, I mean yeah, yeah, I mean, there's about 100% chance the rates are going to be going down from here. But it just shows the market out there that that's perception is that the rates are going to be going lower because there's bad news coming out. So it's the classic bad news is good news is bad news. Eventually, the bad news will be bad news again. And for right now, if it was for me, you got rents down 20% in Broadway. That just seems like something that's unsustainable. And those are very, very high price rents, where I've got friends who lived in places that were probably the size of my office, and it's a few $1,000s per month, and they're all living with like 4 or 5 other guys, and they've got a tiny little s-hole that they live in, and that's just what people do in Manhattan. And that's your lifestyle, and that's for you. That's more power to you. I know it's not for me. And apparently, and actually Arizona was, I believe, I'm not sure if it was last year or the year before, we were the state that had the most amount of influx of people from other states. Unfortunately, it's coming from people like California, and not against you if you're from California, because if you're listening to us, you're probably one of the cool ones, because there's lots of good New Yorkers, lots of good people from every place. But unfortunately, you get a lot of people who wreck their home state, and they come here and try to then enact the exact same policies to wreck.
Of course, it's problem, reaction, solution, repeat, right? That Hegelian dialectic. And it's interesting because markets should really be built on the confidence in innovation going forward, that something actually good is coming out of it, that there's fundamental value there. And what I see is the Fed plunge protection team, the Fed throwing fake printed currency bringing up the price of living, by the way, and affecting everyone in their pocketbook, trying to keep the stock market alive with fake currency, all while at the same time you have the share buyback nonsense going on. I mean, it doesn't look like the stock market is in any way real or fundamentally real in any way that it's actually naturally fluctuating, which tells me that we're gonna see a huge collision course happen in the next, I don't know, it's amazing that it's been pushed off as long as it has been, but in the next couple of years, I can't even imagine what this is going to turn into, because yeah, there's some great companies out there, there's some great stocks out there, but the unfortunate part is that because of all this money printing, with all this fake currency flooding the stock market, with all the share buybacks, with all the manipulation, the centralization, the craziness, what I see coming out of it is that 95% bad companies like the dot-com bubble are going to bring down the 5% good companies with them for a while and really push off innovation for quite some time. I mean, what do you think?
Well, I mean, the some time depends on, if the government's going to quote unquote, save them. And so what needed to happen in 2008 is we didn't need to paper this over, because unfortunately we've just delayed the day of reckoning. And yeah, I have a lot of my clients have made a lot of money, and a lot of people out there have made a lot of money in the stock market, but the stock market only represents maybe like 5-10% of
Mhm.
Americans worldwide. It's a whole lot less than that. And the people you had mentioned, that prices rising, it affects the poor people the most. And so you've got people like Elizabeth Warren talking about, the only thing I ever studied was why people, go poor and or go bankrupt. And meanwhile, they're advocating all the same policies that lead to this. And
Yeah.
so, it's just something that you see time and time and time again. And unfortunately, what's going to happen is, the people that own the politicians, like the major banks that are out there, when next time something goes wrong, they're going to exert their influence to then, be able to, keep these zombie companies and corporations alive even longer. Or maybe they, resort to something like a bail-in, which you could even find directly on the Federal Reserve I forgot if it's .gov or .org website. And you go there, and there used to be a speech by Stanley Fischer, the former vice chair, where he gave the speech in August of I think it was August 2014 in Stockholm, Sweden. Got a really weird memory that I memorized that. And it literally says that the part of the plan is to have bail-inable long-term debt, aka they steal your money from you. And that's the vice chair of the Federal Reserve posting it on his own website,
Yeah, and
talking
that would
about
be
this.
so perfect if they had an actual centrally planned illegal tender cashless system, because everything would be going through the banks, and it would be so perfect for them to go that route. And we know that they are looking towards a centrally planned cashless system. So with bail-ins teamed up with a cashless society, I mean, we're looking
Teamed up with
at
social credit score. If you're in
yeah.
China and all of a sudden now you got a face scan to get on the computer. I mean, this is just
Well,
a nightmare.
and that's a financial Armageddon to any family that wants to save money and be able to actually, protect their purchasing power, which is exactly why we do what we do. And we talk about these issues, Tim, is so that people learn from these, very real risks down the line on the near horizon. It's already happened before, but I
Oh,
mean,
speaking of the dollar store, I think I saw something where it had a bag of like maybe like 50 fake pennies, and that cost like $2. So like even the fake money costs more than the real money that
yeah,
that you
yeah.
would have gotten. And I think it does actually cost more than a penny to make a penny. It might even be the same. Maybe someone can leave that in the comments. I don't know the
Yeah, they
exact
got
figure.
they got rid of the pennies in Canada a few years back, and now they're actually talking about bringing them back. It's just so stupid. It's stupid. But anyway, I want to finish this off, Tim, because we tend to go along with these issues. So I want to ask you about the solutions, because in my opinion, there's more solutions than there are problems. These are real issues. We're not here to scare people. We're here to bring the concern to people so that they can make the right decisions, and we can bring the solutions forward so that they can escape this and the inevitable consequence of central banking and vast centralization of markets and manipulation. I think it's important now more than ever that people listen up, because the banks are bankrupt according to their own balance sheets. We're dealing with a very, very unstable stock market that I think a lot of people should be concerned about, and I think people should take those precautions. So personally, I just think individual responsibility is more important than ever, and people should just understand things and apply their own solutions. But Tim, you run the Liberty Advisor, of course. Can you tell people about some of the solutions, and obviously how they can sign up and be a client with you?
Yeah, thanks, Josh. So I do have a wealth management business that actually I started the day Lehman Brothers crashed. So great timing on that one. But how one of the ways that we're helping people work through this is a lot of people, they might not be into gold or they might not be into crypto and they don't want that. And they just want to do more of the traditional stuff. And that's fine. We can do that for them. But I'm willing to give anyone a free risk tolerance, not risk, or free basically risk assessments of what's actually inside their portfolio. Because a lot of people have no idea actually how much risk they have, or they either have, way less than they think they have, or they have way more risk than they think they have. And I've, met like little old ladies who what we do is we quantify how much risk you can handle on a scale of 0 to 100, with 100 being the highest. And we use a lot of math, geeky stuff like standard deviations to then spit out what your portfolio risk number is. And so, maybe we put in all your different assets and your brokerage statements and whatnot and say, okay, maybe you've got a risk of, 87 inside your portfolio, but maybe you can only handle a risk of maybe 50. And so ideally what we want to do then is create a portfolio that can, in a lot of times what we can do is we can actually put in a lot less risk in your portfolio and actually increase the amount of potential returns as well, which is sort of the holy grail. And then when we marry this with, we do planning and say, okay, well, how much money do you actually need to generate? And then we try to create a safe way to have you generate that much income, while then also providing for inflation protection and probably getting into some, more complicated subjects right now. But basically, long story short, is when you guys, schedule an appointment with me, and Josh will have a link below, you can take a free Riskalyze assessment, something I've been doing for my clients, paying extra for pretty much since like they created this software. But it's really great. It tells you with 95% certainty where your portfolio will be in any 6-month window. And so they can do that using, the geek standard deviation stuff, but they make it really easy in terms of how it gets spit out to you. And then we can also model in, hey, what would it look like if the financial crisis were to occur? What would it look like? And then a lot of people are shocked to say, oh, wow, the portfolio I have now could go down 50% if the financial crisis were to occur again. Or you see people who can't afford to lose any money and stuff that's way too risky. Or you see people who are way too young who've got a risk of like 25 and they're just going to go broke safely staying in cash. And so we have strategies where we can quantify your downside risk, meaning we know with certainty what the most you possibly can lose is based upon the strategies that we're running and risk management strategies that we're playing in. It's very, it's not something that is, I wouldn't say it's super complicated, but it's something that a lot of financial advisors don't do because it's not, just going on, E-Trade and buying, a stock or buying an ETF or buying a mutual fund, which is easy. So when you're running different option type strategies, and as a financial advisor, go talk to your own advisor. If you don't like your advisor or don't know him, then I'd be happy to help you guys out and definitely appreciate the opportunity. I know Josh and I are trying to do more stuff over on float.app. So you guys can find me over there at the Liberty Advisor. You can find me at thelibertyadvisor.com. Find all my media stuff at thelibertyadvisorshow.com. And appreciate, the opportunity over here, just trying to help save people. And as much as the stock market's a mess, it actually looks good compared to the bond market. And that might actually look good compared to the dollar. But it's very counterintuitive how this stuff might shake out. And just because of how things shook out in 2008 doesn't mean that's how it's going to shake out later. Because in 2008, you could have camped in bonds, rates went down, you could have made a bunch of money. But now you don't make any money in bonds, and you've got a whole bunch of risk if they end up losing control. So yeah.
It's crazy times we're living in. Interest rates probably going negative very soon. We're seeing that all over the world. It's a global everything bubble, folks. And that's why everyone needs to pay attention to this and make sure that they can protect their family and their own wealth going down the line. It's actually not that scary if you're on top of these things. So
could we do a hashtag QE Infinity, or for someone who's still listening at this point?
So don't use the hashtags because it won't work. But if you write QE Infinity in the comments, I'll know that you've actually watched the video up to this point and you're not actually a slave. So I'm really happy for all those that have actually watched the video up to this point, because it means that they care about this issue and they're concerned for their future and their children's futures, and that's a very important thing. So QE Infinity, comment below. Don't tell anyone why you commented that though, because we don't want a bunch of people who comment 10 seconds into the video after not watching any of it and start complaining about things to see that and like pretend that they've actually seen the video. Anyway, so I really appreciate it, Tim. And as he mentioned, float.app, that's flote.app, and make sure to check the link below for to work with Tim Picciott. As always, food, water, shelter, self-defense. You're not gathering things with the toughest guy on the block, and of course, gold and silver as wealth insurance, in my opinion, not investment advice. It's just looking at history, it says a lot. Going forward as well into the future, I think it'll be very worthy of looking into things like cryptocurrency and blockchain infrastructure technology that's properly decentralized, I think the privacy-oriented ones are also very important going forward. And at the end of the day, we will win, folks. We will all win this battle against central bankers and tyranny, but it comes down to you as individuals taking responsibility over your own life and taking action unto yourself. I think that is the most important part to deliver to you guys. So anyway, QE Infinity, guys, comment it below. Thanks, Tim, for joining us again for another video here at WAM. We'll be coming back at you guys with much more. There's so much to talk about. It's just piling up and up and up and up, and we're getting a whole bunch of other videos together. And man, I still have videos going back to like 2 months ago, 3 months ago actually. So I'm trying to get everything together and get it out to you guys. It's been very difficult. So I'll do my very best. Make sure to press like and subscribe.
John and I shot a couple the other day too, so we'll be getting those ones out as well.
We got them piled up sky high right now, and it's a good sign. There's a lot to talk about. So anyway, make sure to press like, make sure to press subscribe if you haven't already. Press notify, even though you probably won't be notified by YouTube. Bookmark our channel so you can find it, because sometimes even if you type in the full name of a video with our channel name after it in the search results or in the search on YouTube, our videos still won't come up. You only see Fox News, PBS, CBS, and all that kind of stuff. So it's becoming a very big issue, and we will probably be taken down by YouTube in the next year and a half or so as the election approaches. So make sure to support independent media any way you can. Anyway, until next time, guys, thanks for watching. This is Josh Sigurdson and Tim Picciott signing out from World Alternative Media. Find the truth, be the change. Like what you see here at WAM, don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely, extremely appreciated, as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime as we prepare for the next big step is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan, if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale. So make sure to find us on float.app. That's flote.app. At Josh Sigurdson, as well as at WAM, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are 2 major events coming up that we are extremely excited about, and you can use promo code WAM, that's W-A-M, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.